Salam everybody, this is Investor Sheikh back at it again with another video. And today I want to explain what my investing style is, and as you can see, I am a buy and hold investor. It is a long-term passive investment strategy in which the shareholders who bought the shares continue to hold those stocks without taking into account the market circumstances. So basically, I am buying shares and I'm holding it for years. For example, I am a Tesla shareholder and I intend on holding those shares for at least 10 years, which shows that I'm bullish on the company long term. Now, in my opinion, I believe that the buy and hold strategy is the most effortless and I would say easy investment style, as you are taking advantage of the general uptrend of the market long term. You are ignoring the short term volatility of the market. Now, this is in comparison to day trading and swing trading. Now, with day trading, the positions are either bought or sold and eventually liquidate the positions within the same day. So in the one day period, you're constantly buying and selling shares. Whereas with swing trading, you're buying shares and you're holding on to the shares for a few days or a few weeks, and then you're going to sell for a profit. And that's more of a short-term trading, which I don't do. I mean, I've done it earlier in my investing career, but I've come to the conclusion that it isn't worth it for me. And by being more patient and having a long-term outlook, I would profit more by doing so. For example, if you bought one share of Tesla in 2019 for $300 and you held on to those shares, you held on to that one share today, you would end up with 5 shares of Tesla priced at $600 each, all from a single $300 investment in 2019. Now, you may think that's rare. Not many companies are going to 10x in 2 years, and I agree with you. But that's just one example of many to demonstrate that being patient with your investments will pay off in the long term. Now, this doesn't only apply to growth stocks, but it also applies to dividend paying stocks. So, for example, Ecolab, which is a stock that I talked about in a previous video, is currently at $209.36. If you bought this stock 5 years ago, you would have paid $110 per share. And if you were bullish on this company long term, the buy and hold strategy would allow you to consistently buy shares and taking advantage of any dips along the way. So like this is a dip, for example, and then you just keep holding. Oh, that's a significant dip right here. You can buy more shares there, and then you just keep on holding. So this is a dividend paying stock, so you wouldn't expect a large amount of growth in the short term. The way to take advantage of the buy and hold strategy is to buy shares consistently, meaning once a week or once a month, regardless of the price. But if the stock does drop, you can take advantage of any dips along the way. And the same thing can apply to Waste Management, which is another stock I talked about. If you held onto it for 5 years, you could have doubled your money, essentially. 5 years ago, it was at $58, and now it's at $110. And the key is to dollar cost average. Make the effort to find a stock worth building a position in and just buy a share or two once a week or once a month. And then over time, you will build a large position, and it's going to grow over time. And especially with these dividend paying stocks, you'll receive a dividend as the cherry on top. Now, one of the main reasons why I support buy and hold investing as opposed to day trading or swing trading is taxes. Whenever you sell your stock for a profit, Uncle Sam wants a piece of the profit. And this is especially true if you held your stocks for less than 1 year and you sold it. For example, if you bought a stock for $20 and it went up huge for some weird reason, and now it's at $200 a share, and that growth happened in like 2 months, and you sell the stock at $200, you made $180 profit. Uncle Sam wants a piece of that $180, so you have to pay taxes on that. Now, if you hold the stock for less than 1 year, you end up paying short-term capital gains taxes, which is taxed at the same rate as your income that you get from your job. So, taking a look at the tax brackets, we're going to focus on the single section here. So let's say you had a job that paid $20,000 a year. You'd be taxed at the 12% rate. However, let's say you were doing some day trading on Robinhood. You were constantly buying and selling shares every day. You weren't holding on to any shares, and you earned $60,000 in profits from day trading. Since you earned $60,000 profit from constantly buying and selling shares, that $60,000 is considered short-term capital gains, and it will be added on to your $20,000 salary. So the IRS will believe that you have an $80,000 salary, which means you'll be taxed at the 22% tax rate. That's a big increase from 12%. So you're paying 10% more in taxes, all because you were day trading. So when it comes to buying and holding shares, I like to aim to hold it for at least 1 year, so that I don't end up paying short-term capital gains, but rather pay long-term capital gains, which is significantly smaller. And so yeah, that's my investing style, the buy and hold strategy. All you have to do is just keep buying and set it and forget it. Now, as always, I'm not a financial advisor, so don't copy what I'm doing simply because I'm talking about it. This is my investing style. If you believe that you would benefit from it, by all means, take the time to research it and compare it with swing trading and day trading to see which one you would rather do. This is Investor Shake, checking out.